So let's start with first transaction. Record the owner's initial investment from 50,000 into the business. So we have received payment of 50,000 in bank account. So how to record that? If you receive bank account in your bank, you have your own business and you brought up equity. So how you take it? You are going to make into the bank deposit now. Is that correct?
Yes.
Okay. So you make bank deposit. So that is bank deposit means you have to use module of bank deposit. And guys, let's on everyone your cameras because your batch is not up to that mark where I can blindly explain you guys. Yeah, you everyone are taking granted. Please open your camera. Sharma ji. Yeah, please open your camera. Deepa ji, please. Okay. Sharma ji, please open your camera. Okay, so now tell me, you got amount in your business. Agar you are doing business and you are paying amount of $50,000. So how you are going to record that? Actually transaction क्या होगा? रास्ते में चले जाएंगे पैसे या किसी को दे दोगे आप या बैंक में डिपॉजिट होगा? Tell me how it gonna be?
बैंक में डिपॉजिट होगा सर।
बैंक अकाउंट डेबिट और ओनर्स इक्विटी अकाउंट क्रेडिट.
Yes, correct. Okay, so at least you guys have to reply, na? Since last 1 hour, I'm just trying to explain you, but none of you are replying. So how can I manage this? I'm asking you guys since last 1 hour, what is the transaction? Then why you are not replying? That is very simple thing. See, you have to consider that you are doing business, and if you are doing business, so what it should be? That is a simple transaction. You are getting money in your bank account.
Yeah.
So when you get money in your bank account, so bank account debit. Okay, and who is giving money? The owners. Owner's account is credit. Okay, so that is a simple first transaction. And the second transaction is
Purchase
office supply on account for 1,500. Okay. So now what is the transaction? We have purchased office supply. So what we have purchased? The office supply.
Supply debit.
Office supply is debit, right?
debit, yes.
Cash is credit.
Okay. And that is office supply debit. But you have not made the payment yet.
Yeah.
But you purchase on credit. That means they from your vendors.
Yeah.
So vendor account credit.
Yes.
Sarvaji, are you getting that?
Yeah.
Yes, sir.
Then
Accounts payable credit.
yeah, accounts payable.
Okay.
Okay. Vendors, accounts payable, and sundry creditors all are same.
Okay.
And then the pay 2,000 in rent for the office space.
Yes.
Okay. So how much amount you have paid? That is 2,000. For what? So for office rent. So what always office rent is debit, and you have already paid. That means bank account credit.
Yes.
right? So to record this transaction, about the models we will understand later on, that is fine. Okay. Then the next transaction is,
Receive $5,000 from a customer for service rendered.
okay, so you guys, company has provided service to one of the customer, and customer has paid amount to you. So let's consider that we have deposited directly that amount into our bank account. We have received money, so we are not keeping that money with us, right? So that money is going to our bank account.
Yeah.
So whenever balance increase in bank account, so we have to debit bank account. Okay, so bank account debit, and for what we have received for the service rendered. That means we have sell our service. So service account or sell of service account credit.
Credit.
Bhumika clear?
Yes, clear.
Megha?
Yes.
Okay. What the next one is? Can you guys please read it?
Pay
Paid $500 for utility bill.
utility bills.
Okay, so here you have paid 500.
Expenses.
So how much amount first of all you have paid? 500.
500.
For which purpose?
Utility
Utility
bill.
bills.
Okay, so utility, it's your expense.
Yes, it is expenses part.
Okay, so utility expense debit.
Yeah.
And from where you have paid?
Bank.
From bank account?
Yeah. Bank or cash.
Yeah, so bank or cash account credit,
Credit.
right?
Yeah.
Then next one.
Purchase
Uh,
equipment worth $10,000, paying
yeah.
4,000 cash.
Okay, so this is something a bit long transaction. So let's break it out.
Okay.
First, we have to record the transaction of purchase 10,000 of equipment, right? So 10,000 of equipment means you have purchased on credit, right? You have purchased on credit. So what we were doing till now? We were
Equipment
taking,
account debit to vendor account.
right?
10,000.
Yeah, and equipment, that is our assets.
Asset. Yeah.
Okay, how to create assets and everything, I'll explain you there, so don't worry about it. Okay, so equipment account debit and vendor account credit. Vendor means accounts payable, vendor and sundry creditors, all are same. Bhumika, you looks confused. You can make notes for that. Vendors.
I think maybe three entries are there. One is a debit of 10,000 and two credit entry for 4,000 and 6,000. Is it
No,
like that?
not like, we are going step by step. We are going with that. Okay.
Okay.
First of all, we have to record the purchase of equipment.
Okay.
So we have record equipment account debit. Okay, and accounts payable or vendor or sundry creditors, it's credit. Okay, I'm explaining you guys in simple Indian language, sundry creditors. Okay.
Yes.
Now you have recorded one transaction, you have recorded the bill. Now you are making payment. So when you make payments, so your bank balance down.
Yeah.
So you have to credit bank account. Correct?
Yeah.
And debit, which account you have to debit? You are paying to whom? To vendor.
Vendor.
Right? So you have to debit vendor.
Vendor.
What's the amount? That is 4,000.
4,000.
Okay. So we are not going to record remaining 6,000 amount transaction because that is already recorded.
Yes.
When you record bill of 10,000, you have made payment of 4,000. So 6,000 will show under accounts payable automatically.
Yes.
Okay.
Yes.
Now let's go with the next transaction.
Record depreciation expense of $1,000 for equipment.
Okay. Depreciation.
Yeah.
Now, this is non-commercial transaction. Means there is no accounting. There is no commercial transaction. There is no transaction of bank or cash. But this is internal business transaction. But it is your expense. So depreciation, that means it is your expense. So you have to debit depreciation expense account, and which account you have to credit, on which product you are depreciating that. So that is your equipment.
Equipment.
Okay. As of now, I'm going with the simple method. I'm not including accumulated depreciation. Else there would be a confusion. Okay. So as of now, we are going with the simple method. Depreciation expense debit and equipment account credit.
Credit.
Okay, Mega.
Yes.
Mr. Thomas.
Yes, sir. Clear. Crystal clear.
Dharmaji.
Yes, sir.
Clear na? Okay, fine. What's the next transaction?
Pay $30,000 for employee salaries.
How
3,000.
much? 3,000, right?
3,000. Yes.
Yeah. So payment of $3,000 for employee salary. Now, what is the expense over here?
Salary.
Salary. So just debit it.
Yeah.
Now, from where you are paying that?
Bank.
The bank credit.
Hmm.
Sort out?
No. First, we have to book the salary particular employee account.
Yes. First we have to record. Actually, see, as of now, we have a couple of candidates over here. And for them, I am going with very basic accounting. Okay. So in if you go with the complex, so what will happen? Salary expense debit, salary payable credit. And when we make the payment, so at that time, salary payable debit and bank account credit.
Yes.
So Mega and Bhumika, we have created provision for that.
Okay.
Salary. Okay, we have created provision for the salary. So when you are not making payment, but actually you want to show them in your books. So at that time, you have to debit expense and credit liability account. So salary payable, that is your liability account. Okay. So and as per this transaction, we have paid $3,000 salary to the employee. So the first transaction is salary expense debit, which is the part of profit and loss account, and salary payable credit, which is the part of current liabilities. And the second transaction is when you make the payment. Making payment means bank account credit because balance is going out. Bhumika, balance is going out, so bank account credit, right?
Right.
Right. And debit we have to do that
Employee
payable
account.
account. Okay. So let's go with the next one. What is the next one?
Next one is that receive an invoice for $2,500 from a vendor for inventory purchase.
Okay. So here we have to understand few things. You got bill from the vendor. Whatever you have purchased inventory. And what is inventory? First of all, we have to understand that inventory, it is not our expense. That is our current assets.
Assets.
Okay, which we sell to our customer after adding our margin money. Margin money is profit.
Yes.
Okay.
Yes.
So what will happen? Inventory account debit. Okay, because we are purchasing inventory, and inventory, that is our assets. So whenever assets increase,
Yeah.
whenever assets increase, you have to debit them. Just like bank account, when we have when the bank account balance increase, we debit it. So what we have to do? Inventory account debit, and we have purchased this on credit, right? Means on account, means from the vendor. With the credit of 15 days or 30 days, we have purchased from them. So what we have to do? Inventory account debit and vendor account credit. Okay.
Is this possible in only this inventory goods bills ना? Service sector में possible नहीं है ना ये जो
No, it is possible now if you buy any kind of service. Okay. So, but yeah, but service that could be your direct expense or indirect expense.  Okay. If you are using like freight and services, and if it play a bigger role in your profit and loss account, and that is your direct expense. Okay, so you can directly assign freight and services debit and your vendor account credit.
Yes, sir.
Okay, in service sector that's happening because you can't stock service na. Okay, you
Yeah.
cannot stock the service.
And in inventory, stock also adding na, like goods is coming in business. तो स्टॉक भी बढ़ेगा ना उसके सामने उसका स्टॉक भी प्लस होगा.
Stock inventory, that means stock.
हाँ.
Whatever. Okay, and
हाँ.
COGS means cost of goods sold. That is different thing.
Okay.
Okay.
हाँ.
Let me explain you what is COGS. When we are going with the practical example, you have purchased 10 units at the rate of 10. So your inventory becomes of $100,
Yes.
right? Now you have sold 5 units at the rate of 20. You have sell 5 units at the rate of 20. So your sell amount is 100,
Yes.
right? But
हाँ.
what is your cost of goods sold? 5 into 10.
500. Okay. हाँ.
50.
50.
Sorry, 50. हाँ.
Okay.
हाँ.
Bhumika, we have purchased 10 units at the rate of 10.
100.
Okay. Now we have sell 5 units at the rate of 20.
100.
Okay. So our sell price is $100. Our COGS means cost of goods sold. So what the units which we have sold, the 5 units. 5 units multiplied by 10. So 50 is your COGS. And now what is left in your inventory?
5 unit.
5
5 units at that 10. Okay, so this is how COGS count. Okay, and whenever there is a sales entry of inventory, so we are under impression that AR debit and sales credit, but it is not like that. There is another entry also into backend. When we make sell on credit, so accounts receivable debit, sales account credit. This is your first transaction. And another transaction is COGS debit and inventory account credit. Correct? Because your inventory also decreased now. And whenever assets decrease, so you have to credit it. Okay. And whenever expense increase, you have to debit it. Okay, so let's go with the next transaction.
So record a customer payment of $7,500 for a service to be provided next month.
Okay, so this is your advance payment.
Yeah.
You have received 7,500. So how are you gonna record it? That is also question. You have received 7,500 in your bank account. So your bank account, that means your current assets increase. So bank account debit. And you have received money from customer as an advance. So accounts receivable credit. Okay. What is the next transaction?
Record the purchase of a vehicle, $20,000, paying $55,000 in cash and financing the rest.
Okay. Let me see the amount. Regular purchase of vehicle over 20,000, paying 5,000 in cash and rest financing. Okay.
5,000 in cash and financing the rest.
Now, for this, to understand this transaction, we are going with our own example. Like we are purchasing one car of $20,000. Okay. So, and that is for our business. So what we are going to do with the first transaction? Vehicle, that is our assets.
Yeah.
That's all assets. Okay? So vehicle account debit. And to
Vendor
whom
account.
we have to make the payment, vendor account credit.
Right.
Okay, because when your liability increase, you have to credit that account, and vendor account, that is your liability. Okay.
Mm.
Now you are making payment of 5,000 to
In
that
cash.
vendor.
Vendor account debit and bank account credit
Perfect.
with 5,000 rupees.
Yes.
5,000.
5,000. Now for the balance amount,
Is the taking the loan.
yeah, you are taking loan. Okay, so when you take the loan, so where it comes, either to your bank account or direct to the vendor's account. So we are considering that from the finance company we get amount in our bank account.
Okay.
You got 15,000 in your bank account as a loan. So
Mm.
Bank
what
Plus
account.
bank account debit to loan on vehicle.
loan payable? Okay. Megha, are you getting it?
Yes, sir.
Bhumika,
Yes.
Mr. Thomas,
Yes, sir.
you are
But
the expert. You are the expert. I know. You have prepared financials as of now.
no, sir. I'm noting the.
Okay. So for the 15,000, we do bank account debit and loan payable credit. Now we got the amount of 15,000 as a loan to pay that to vendor's account. Now consider you are making that 15,000 payment to the vendor. So what should be the transaction? You are making payment to the vendor from your bank account. So what should be the transaction?
Vendor
Vendor account
When
Vendor to
debit
bank
and
account.
bank account credit.
Okay, done. Now I really feel like the satisfactory answer from your side, because before like a 15 or 20 minutes back, I was really worried. Okay, so now what is the next transaction?
You
said refund of 200 to a customer
issue
for
a
return.
refund of $200 to a customer for return goods.
Okay, issue a refund of 200 to a customer. So here we are going to refund the money to the customer. So how you gonna record it? Let me open drive over here. You are giving money back to the customers.
Vendor account debit, bank account credit.
No. It's a say return account debit to AR, sir.
No, see what you have done. Just a minute, let me open that. Issue a refund of 200 to a customer. Customer is equal to accounts receivable
Yeah.
is equal to sundry debtors.
Hmm.
Okay. So you are giving money to whom? To the customer. So customer account debit, first of all. Okay. Or you can do another thing also. You have returned the goods. There's two transactions here. You can either record one transaction or you can record two transactions. If you go with the two transaction entries, okay. So sales debit
Yeah.
and customer account credit,
Credit.
because they have returned goods to us.
Hmm.
Okay. So their liability towards reduce. So the first transaction we can record sales account debit, because sales is reverse out. When you make in general terms, when you make sales, say at that time sales account always credit, but if there is a return, so sales account debit and customer account credit. Now you are issuing refund of $200 to that customer. So what will happen? Customer account debit and bank account credit.
Credit.
Now in this two transaction, customer account in first transaction it is credit, and in second transaction that is debit.
Debit.
So credit and debit you can nullify them, and you can use only one transaction, that is sales debit bank credit. Okay, Megha.
Yes.
yes.
Okay, now
We also like do this entry not as a sales but purchase return. Sorry. Sales return and purchase return, both word are also used na for these entry.
No.
For this transaction, you have to use refund receipt module.
Okay.
It will the journal entry of refund receipt, that is sales debit and bank credit.
Okay.
Okay.
Um,
Now record 1500 loan received from the bank. Oh, sorry.
Uh,
Uh,
Pay $1,200 for insurance
1200
for
is
next
for the
month.
next 6 months.
Hmm.
Pay 1200 for insurance for the next 6 months.
Hmm.
Now, when you are doing, there are two types of accounting. First of all, accrual basis and cash basis.
Hmm.
Okay. When you are doing accounting on cash basis, so you do not need to worry about the period for which the expense made. About the periods, whether it is for 6 months, 12 months, or current month or previous month. You do not need to worry about it if it is the transaction going on cash basis. Means if you manage the accounting on cash basis, but if you manage the accounting on accrual basis, so you have to worry about prepaid expense.
Hmm.
This is your prepaid expense. And what is accrual basis accounting means? Using accrual basis accounting, you can show your expenses to the respective months
Month.
for the period for which you are going to take the benefits. Okay, now for the 6 month you are paying insurance, so you are going to take benefit up to 6 month. So this expense belongs to 6 month now,
Mhm.
right? So, and a prepaid expense, that is your current assets,
Understood.
because you have paid this in advance to someone.
Hmm.
Okay, so what is the transaction of this 1200 for insurance for the next 6 months? That means prepaid expense debit,
To bank.
and you have made payment from your bank account. So bank account credit. All of you guys getting enough?
Yeah.
Yes.
Okay. Now record 1,500 loan received from the bank. Where you have received into your bank means bank account increase. So bank account debit. And from where you have received,
Loan.
it's a loan.
Loan.
Loan account credit. Now 16 pay 600 in interest on loan. What you are paying? Interest.
Hmm.
And interest your expense.
Right.
Correct? So interest expense debit.
To bank.
And from where you are paying?
Loan.
Bank. Okay?
Bank.
From the bank account, no?
Mhm.
You are paying interest for the loan account. Interest on loan.
Yes.
Okay? You are paying interest on loan. That means interest account debit and bank account credit. It is not saying just key record interest on loan. It is saying pay interest
Pay.
on loan. If it would be saying like record interest on loan. So at that time you have to record expense and you have to credit loan account because you are increasing your liabilities. But here it is saying you are making payment
Mhm.
of 600. That's the reason interest expense debit, interest on loan debit, and bank account credit. Now record bad debts,
That's
expense
expensive.
of 300.
Hmm.
So we are going with very simple transaction. Don't want to make it much confusion.
Mhm.
Bad debts, that is your expense.
Expenses.
Okay, so you just have to debit it and you have to credit accounts receivable.
Yeah. Yeah.
Okay, that's the simple transaction we are going for now. Then adjust 500 for
Prepaid
adjust for 500 of prepaid expense used during month.
month. insure.
Before what we have done, whenever we make prepaid expense, so we debit prepaid expense, okay,
Mhm.
and credit bank account.
Yeah.
But now it is saying adjust for 500 of prepaid expense used during the month. That means during the month we have to record one transaction
Mhm.
where we have to record prepaid expense, where we have to record insurance expense.
Yes.
So let's say any kind of prepaid expense we can consider these are insurance expense.
Insurance expenses.
Insurance expense we are debiting,
Mm.
and we have to reduce our assets.
Expenses here.
Prepared
Okay.
expense.
So whenever you want to reduce your assets, you have to credit that account. So you can credit prepaid expense. Okay.
Yes.
Megha, all clear?
Sir,
Or confused? Or
me
confused?
is not understanding.
Okay. Do one thing. Bhumika, tell me.
Credit prepaid account, but which account is debited?
You can use insurance expense now.
Okay, insurance.
Okay. See, Megha, when we make any payment in advance, at that time we record as prepaid expense, prepaid insurance, and prepaid insurance, that is our current assets.
Yes, sir.
That is not expense. Okay, that is current assets. So what we do, we are recording assets debit and bank account credit.
Yes.
And now when you adjust that, adjust means you have made payment for the 6 month of period, but now you have to recognize that expense also, na? Just like
Yes.
you are making payment for the month of April, May, and June.
Mm.
Okay, and in March you are making payment, just like for the $3,000. So
Ah.
$3,000 prepaid expense debit, bank account credit. But now in April month,
Mm.
you have to record that 1,000 expense also, na?
Yes.
Means 3,000 divided by 3. So
Ah.
for 1 month, that is 1,000. So 1,000 we have to record expense account debit 1,000, and we have to credit that prepaid account.
Yes.
So okay, so the balance of that prepaid account, instead of 3,000, it will be 2,000 now.
No.
Bhumika,
Yes. Yes.
clear? Okay, Megha, now clear?
Yes. Clear.
Okay, great then. Chalo. Pay 800 in sales tax collected from customers. Pay 800 in sales tax collected from the customers. So when you record sales transaction now,
Mm-hmm.
and sales tax is included into that. So what is the transaction? AR debit.
AR debit to sale to tax. Basically, sale account credit and tax account is credit.
Right? We can say we are selling goods of $100. 18% GST is there. Over there in US, there is no GST, but I'm just giving you example. Okay. So the actual amount is 118.
8. Yes.
So AR debit with 118,
8.
sales credit with 100,
100.
and sales tax payable by 18.
18.
And sales tax payable, that is our liability account. Okay.
Yes.
So now when we make payment of that liability, so we have to debit liability account now,
Yes.
right? So liability account debit means sales tax account debit, sales tax payable account debit, and from which account we are paying? From the bank. So bank account credit. Is it okay?
Yes.
Okay. शर्मा जी आप कुछ बोल नहीं रहे हो? Everything is going good?
Yes, sir.
पक्का?
हाँ.
Okay. Now
Right.
write absolute inventory worth 400. So now how you gonna record this? पहले तो ये क्या हुआ है, इन्वेंट्री जो है, अब इन्वेंट्री का लॉस हुआ है. Oh, sorry. Ola, yeah, Mr. Thomas, you got confused. Yeah. Okay. So first of all, you have to understand what is it. Actually, we lost inventory of $400, and inventory, that's our assets.
Mhm.
And when assets there is a loss, so we have to credit assets account. So you find out we are going to credit inventory account.
Right of account debit.
No, the first we have figured out which account we are going to credit. So that is inventory account.
Yes.
So which account you are going to debit? You can bring this either into a COGS or into inventory adjustment. Okay, this is a write-off, and directly or indirectly, it is related to your COGS, right? Because you are purchasing goods, so directly or indirectly, it is going to your COGS. So either what you can do, either COGS debit, or you can create inventory adjustment account under the COGS. Okay, so you also be aware about actual COGS and including with this adjustment COGS. Okay, so COGS account debit and inventory account credit. Record a payment of 1,000 for professional services. Megha, which transaction we have to record?
Bank account credit because we paying rupees $1,000 and professional services we taken. So professional service account debit.
Okay, done. Now, this 21st transaction. Purchase inventory worth 3,000 on credit. Mr. Thomas, what should be the transaction?
Inventory account debtor to vendors account.
Again?
Inventory account debit and the vendors account should be credit.
Okay. Fine. Then sell inventory worth 4,500 to a customer on account. So which transaction there should be?
AR account debit to sale.
Okay.
Record the cost of goods.
Then record the cost of goods sold for the inventory sold in 22 number. So actual cost was 3,000. We have sold at 4,500. So the
1,500. Cost of the
For inventory sold in question number 22.
what is it? What's the COGS? That is simple. You have purchased product of 3,000
3,000.
and you are selling that at 4,500. So what should be your COGS?
3,000.
3,000.
Sure. Deepaji, what should be your COGS? Sarmaji, Bhumika.
If there is the inventory's closing balance is 0, then the COGS is 3,000, I think.
That is a very simple transaction. You have purchased goods of 3,000 and sold at 4,500. So
Yes.
1,500, that is your profit,
Yes,
not
yes.
COGS. Your COGS is 3,000. It is already written. Okay, so I think you got a bit confused. 1,500 you guys considering as a COGS. It is not COGS. That's your profit. That's your gross profit. Okay, your actual COGS is 3,000. Now the record return 500 of damaged inventory to the supplier. Now
Vendor account debit or purchase credit.
not purchase credit, inventory credit, right?
Vendor to inventory.
Vendor to inventory, yeah. Vendor account debit. Okay, because we are returning goods through them. See, in a sales, there are 4 transactions, 2 debit, 2 credit. But in purchase, only 2 transaction. AP to inventory, okay?
Yes.
Now adjust inventory for shrinkage of 200.
Okay.
Shrinkage is a kind of a loss
Loss.
of your inventory, which you have to record under COGS.
Inventory debit.
Okay, so
COGS account.
COGS debit and inventory.
This credit.
Credit.
Now all these transactions are related to create a new customer and everything. So how was your experience with this 25 transaction? Megha, I think your is this your first lecture, second lecture, right? And Bhumika, this is your first lecture.
Second.
First lecture.
Yeah, but the first one in a couple of transactions, I was a bit worried about you because you were getting confused and could not get the proper answer also. And Sarmaji, how you feel? All good?
Yes,
थोड़ा
sir.
speed करो यार. Okay, so as of now, we have completed 25 transactions. So guys, would you like to proceed further with the account creation and all? And don't worry, on this Saturday, I'm definitely gonna take the class. Because okay, so and maybe on Sunday also. If Sunday not sure, but for the Saturday, yeah, I will be there.
And what about sir Thursday?
Yeah, I'm already there.
Okay, sir.
I'm already there.
Okay.
Because I don't want to skip the class. Because what's happening when I skip the class now, so candidates forgot about all the things, and it's happening.
Yeah.
And what you have to do, guys? That PDF module, the use of module. Okay, the QuickBooks module, you have to understand that. And
Yeah.
if you go with this 25, we have just recently discussed only 25 transactions. It covers all. Sales is there, purchase is there, return is there, bank deposit is there, loan is there, loan interest is there, assets also there, depreciation also there, interest on loan also there. So if you go through with this 25 transaction again,
Okay.
so you will understand almost 80% of accounting transactions because everything is there. Even inventory adjustment also there. Okay, so in this 25 transaction, everything is there. So by the next lecture, I hope everyone you are going to record this transaction in your QBO file.
Sure.
Okay, and Mr. Thomas, we have class by 9, not 9:30.
Sorry, sir.
And links are all
Links are not received.
okay. But the links are already there in a session.
Yeah.
Okay, sir.
By the 26 transaction, all these are QuickBooks related transactions. And that's really great if you go through with the modules. And only after that, you can do all these transactions. So that becomes very easy for you. Like creating customers, recording sales, creating new vendor account, and record purchase of. Okay, so all these are use of module. Now you guys are aware about the transactions. What should be credit and what should be debit. Now it's time to learn the modules of QBO. And on the base of that, we will go through the rest of the transactions. Okay?
Yes, sir.
Done?
Done, sir.
Any questions, Megha?
No.
Okay, Bhumika? Okay. शर्मा जी स्टार्टिंग में तो बहुत तकलीफ थी बट आई थिंक नाउ यू आर गुड टू गो जब आंसर नहीं देते हो समझ जाता हूँ कि आपको पता है आंसर क्या है. It takes time. See, कोई भी सीख के नहीं आता है, so it takes time, but don't worry, you will learn it very soon now, because we are on a third phase of this accounting. And after we complete this module, okay, guys, can you see the payroll and tax transaction 35 to 39? That 5 transaction will take at least 2 lectures. Those 5 transactions, 35 to 39. Record payroll expense, record payroll liability, payroll 1,500, record sales tax, and pay 800 in sales tax. In this session, I am going to explain you the entire payroll, and that is the reason it will take time. And when we understand the payroll, so we are creating multiple accounts, and there are so many accounts. Like first of all, salaries and wages account means gross account, gross expense accounts. Then their federal income tax liability account, state unemployment tax account, so means SUTA, FUTA, Social Security, Medicare, federal income tax, state income tax, 401k, retirement plan, and then a disability insurance or any other deductions. So we create all the liabilities account, and we have to create all those liability accounts in a proper way in our balance sheet. So you can easily reconcile all the liabilities, and whenever you make the payment, you record them in a proper way. So, and that is the reason it will take 2 lectures to understand. In first lecture, we will create only accounts. I'll explain you the entire payroll on Excel, and on a base of that, we create all the accounts. And into the next lecture, we record one journal entry of payroll in that account. I mean, in those accounts. So, and after that, we will check profit and loss account also and balance sheet account also, where we can find our liabilities, and in P&L we can see the segregation and allocation in a proper way of all payroll expenses. And that is the standard format. If you miss that, then you're gonna create mess up. But if you follow just that, so you will have payroll in a proper way. Okay, so those are the things. So guys, let's meet day after tomorrow without fail by 9.
Yeah, sure.
Okay, without fail by 9, we are going to start the session. And in that session, before that, please go through with the module and their usage. That will be really helpful. Okay, Bhumika, you are new here, so that's really great if you go with the QuickBooks, that module's name. Okay, use of modules. So on a base of that, that will be easy for you to understand why we are recording transaction and where. Okay. Okay, guys. Any question for today?
No, sir. Thank you.
Okay. Thank you for a quick response for those 25 transactions. That was a good session. In fact, we got answer quickly, and you guys understand also. And Bhumika, I hope you have made the notes. Right? Okay. Fine. So when you are going to Canada? Sorry? Oh, your voice is not coming.
Mic is off.
Not coming. Not audible. Write in the chat.
I think her
You
headset
can
is.
write in the chat. I think postpone કર્યું છે.
She is smiling.
You can type in a chat. You can type in a chat. Actually, Sharma ji, you are looking very tired. पूरे दिन का.
मैं आई 1:09 बजे था
Sorry.
1:09 बजे आया था मैं
Okay. Fine.
गाड़ी चलती है.
Bhumika, I think hopefully we will have answer with. Okay. Okay. Fine. Fine. Okay, so guys, it's a time to leave now. It's a time 44. Let's meet day after tomorrow without fail
Yeah.
by 3 p.m. Okay, and get ready, guys. Do some exercise. Without exercise, अगर यहाँ पे आओगे, so you will have like we can say in our Gujarati, bagla would say, that means ducks fly like flying. Yeah, it's like that. So better if you understand things. Okay.
Okay.
Okay then. Chalo. Bye bye. Take care.
Bye.
Bye.
Good night.
Thank you.
Yeah.
Thank you.
Thank you, sir.
Thank you.
Yeah. Thank you.